Hi, I'm Tyler Ballhorn. Welcome to the Stock Scores Market Minutes for October 10th, 2016. What is the day trader's biggest mistake? Well, most traders have a fear of missing out on a winner, and this causes them to take trades that don't fit their strategy. In a fast-moving market, in the excitement that comes with that, you feel emotional. And you have that fear of missing out. A stock that maybe is moving up but doesn't fit all your rules, you take it anyway because, heck, it's going up. Ultimately, you have to have a plan with a rule checklist. Make sure you're following your rules and mechanically go through that checklist one point at a time to make sure the trade fits your strategy. You have to be willing to let some winners go if they don't fit your rules. Because by doing that, you're going to pick up on the trades that do fit your rules, and that's how you make money. All right, let's get into this week's analysis. S&P 500 short-term chart, 30-day, 60-minute. You can see we're stuck in the doldrums. Anyone who is into sailing will know what the doldrums are. It's a place where there is no wind and no direction, and that's really what the market is doing here. We've been in this sideways range with diminishing volatility for some time, and the waves of volatility are getting tighter and tighter. That's like a coiled spring. Eventually we're going to break out of this range, but for now it makes it pretty hard to trade. You don't get great follow through on individual stocks. Looking at the weekly chart, you can see that pattern, and it's basically building right there. But in the context of what's gone on over the summer, we've still been stuck in that narrow range, and even going back for some time, as outside of these little corrections that we had, the market hasn't traded with a lot of volatility. So what we need is some catalyst to break us out of this range, and maybe we'll get that now that we go into Q3 earnings next week. On the Russell 2000, similar situation, stuck in a sideways range, good upward momentum, the buyers are in control. My expectation is we probably break out to the upside and test this resistance level, but if we instead break to the downside, break that upward trend line from a falling top, well, then you got to be nervous. So this is kind of a neutral situation right now. We need to see the direction of that break. On the Canadian side, again, maybe a little more volatile, but still stuck in that sideways range. We had some decent selling pressure when gold fell because, of course, the Canadian market heavily and that dragged some of those stocks down. But this is not a bad chart in the short term. It's basically neutral, heading sideways. On the longer term chart, we've got good upward momentum, but now we're in that sideways, boring trading range that we've been in through the summer. We need a catalyst to break us out to the upside so that we can test this level of resistance, or do we break to the downside, breaking down through that upward trend line, leading to lower prices? Hard to say at this point. You got to wait and see what the market tells you to do with a break out of this trading range. On the TSX Venture, we did have a little breakdown from a pennant pattern this week on the weakness of gold. I warned about that in past weeks, and now it looks like we're probably going to see more weakness. Wouldn't surprise me if we could go up for a few days, but ultimately I think we can get down into here and test that first level of support. So be careful with those smaller cap mining names in Canada. On the Treasury bond side in the US, we are in an upward trend, but we're right at that trend line. You can see we've retraced back to it. And this is the point where, is the market going to bounce, or is it going to break that upward trend line? You could probably draw this a little bit more like this, in which case we have already broken that upward trend line. So I suggest caution with bonds. I do think we can see more weakness here. Why? Because the expectation is that the Fed is going to start to raise rates. Now, I don't know that we're going to see a consistent raising of rates over time. I think they might do one and then take a break for a while, and that may only bring the treasuries down into the support area where they then go sideways for some time. So I don't think it's a critical situation yet, but you want to keep an eye on that chart and see if we do have a strong move through that upward trend line. Of course, that speculation that the Fed may raise rates is what's motivating the US dollar to move higher. This is the weekly chart of the US dollar, and you can see that we are breaking that little downward trend line right there, just sort of tickling through it from a pennant pattern. This should lead to higher prices in the US dollar, but it's going to take time. There's lots of resistance to work through, so don't expect this to go rocketing higher necessarily, but it is starting to inch higher because of that speculation of a US Fed rate increase. And of course, that has really hurt gold this week. We had the big sell-off on, I believe it was Tuesday, breakdown through the long-term upward trend line. And then even on Friday, when the jobs number came out and it wasn't all that strong, something that should have motivated gold to go higher, it didn't last. We had a little spike in gold in the open, and then the market filled in the gap on oil. We ended up closing very near the lows of the week. And so my feeling is gold is in a little bit of trouble here. Now, oversold. This is a big move for 1 week, so it wouldn't surprise me if we get a little bit of an uptick move, but ultimately I think we're going to test this low point here, 116 on the GLD. On the oil side, we've had a good recovery, of course, when news of the OPEC wanting to restrict production, that happened there. We've been inching higher ever since, probably some short covering in that zone. Now we're getting a little overbought, and you can see on Friday there was a little bit of profit taking. Not a big deal, but I do think we retrace for a few days here. That could be a little bit of a weight on the stock market, which really has looked to oil in recent weeks and really in some time as a possible or as a catalyst for weakness in the market. So if we do get some weakness in oil, that could move its way into the stock market as well. Now, the fear index, we get these little spikes higher and they always get sold into. So basically we've got this pessimistic pattern on the VXX. Part of that is time value decay of this instrument, but it does show that the market is getting more and more complacent. And so my feeling is, although we may get a rate increase, I don't know that that's going to mean a real negative for the overall stock market. It'll be a negative for things like utilities. It'll be a positive for things like banks, but I don't think it's going to be a negative for things across the board. Yes, gold will probably go lower, but there's still a ton of money out there and it's looking for a place to land, and North American equities is where money seems to want to go. All right, we're going to get to the trade of the week in just a moment, but let's first go over my ratings for these sectors. US and Canadian stocks, they're just stuck in sideways ranges, so I've put a neutral rating on them. I've dropped my rating to bearish on gold, although I do think we could see a short-term bounce back in gold. I would use that as a way to get off some of your gold positions if you have them. On the oil side, neutral on both time frames. It's a little overbought short term, so expect possibly a pullback in the short term. The weeks leading up to the third quarter earnings announcements, which start next week, tend to be very poor trading weeks. Third quarter, the weakest quarter, and the market tends to be very quiet, often correcting at that time. Well, we didn't correct, but we did have that boring market. Stocks are stuck in a narrow range looking for a trend catalyst. Oil has come back pretty well over the last little while, but it's due for some short-term profit taking. Gold has broken its long-term upward trend, but it is overbought. I wrote there it is oversold in the short term. Probably due for a little bit of a bounce back, but I wouldn't be considering that a signal to jump into these stocks again. Fear not really a factor in the market. All right, let's get to the trade of the week. This is a stock that I traded on Tuesday or Wednesday, whatever the 5th of October was. Sorry, that was Wednesday, I guess. And bought it right here. It fit the criteria of my intraday pullback strategy. Trend went parabolic. See how it curves up like that? So I sold it right there. And then I actually bought it back here. That trend I had, when it ran up like this, I moved my stop up to break even, got stopped out for even there. So on a risk reward basis, it was a real nice trade there. I think a RR of around 8 or so. And then on the second entry, it was a break even. This particular trade all done with my intraday pullback strategy, my special indicators for TradeStation, including action candles, abnormal activity indicators that I've developed for TradeStation. If you want more information on that, take a look at the Learn page on StockScores. Well, I hope you've enjoyed this presentation. Please click on the like button. Please subscribe. And if you have your comments, happy to read them and answer them. Leave them in the comments section below. Have a great week in the market and trade well.